We have one more panel of this conference day today, and that focuses on venture capital funding in Europe. And for that, we just have the perfect panel moderator, the perfect host, who is joining me in the studio now. Fabian, of course, one of the organizers of Bitkom, and he really knows his way around. So Fabian, status quo, outlook, macroeconomic perspective, you've got it all under control, and you discuss it now with your guests.
I hope so. Thank you, Monica. And also a warm welcome from my side. And yeah, I'm very happy to moderate this last panel. And yeah, I really love the topic. So I'm really looking forward to this interesting topic and all the discussions we're going to have. Two of the main themes of the Digital Finance Conference this year are digital sovereignty and the development of the European finance ecosystem. And when digging deeper into this topic, we cannot ignore the limited availability of venture capital. We have observed huge funding rounds in the last weeks in the insurtech and the fintech scene. And there was one thing it was in common. We saw that they were all led by US or Asian VCs. And whether this is a problem or not, and how the VC landscape can be improved in Europe, I want to discuss with three proven experts. Therefore, I'm very happy to welcome Kiana Mahdi, VC Managing Partner of MicroVC. I also welcome Nazim Cetin, CEO of Allianz X, and Paul Jele, Head of Investor Relations of VFox. And before drawing the bigger picture, I want to focus on the status quo. I would be interested in your perspective first, Nazim. Allianz X is one of the biggest corporate VCs in Europe with a very strong focus on later stage investments. How do you assess the current situation in the VC landscape, especially when it comes to financing growth?
Hear me? Sorry, I just want to check that you can hear me.
We can hear you.
Okay, great. Good question. How do I assess the overall VC environment? Look, if you see what's happening, and we also have Paul from VFox here. So obviously, we have great companies arising out of Germany, out of Europe, that can attract capital, that can make sure, or that can ensure that foreign investments are coming into Germany or into Europe. We have other companies that are upcoming. We read recently, if you look at Salutis valuation, where they are now. So overall, I would say it's positive. I do think there might be some bumpers that we need to take care of. And I think we will speak about them in a minute. And what do I mean with bumpers? So what is the role of the financing parties in this game? Where do they come from? But from a company perspective, I do see it positive.
Cool. I like this positive point of view. That's good. You've already mentioned Paul. You've already mentioned VFox. I think there was a massive funding round last week. You raised $650 million in your Series C. Maybe an easy question. Was it difficult to raise such a huge amount of money, or was it easy? So that would be maybe a good starting question for you.
Okay, sure. Just one quick remark. I'm actually working as a chief of staff for VFox. I also do our fundraising, but my official title is chief of staff in investor relations. But happy to answer the question. Was it easy? Was it difficult? I think in between. We also raised capital year before, just before COVID started. At that time, we had the worst timing possible. We went out just in March when everything happened. We were on a roadshow around the world and basically weren't let into the countries anymore. And most investors had basically an investment shutdown for a couple of months, just waiting to see what happens. So back then it was tremendously more difficult than it was this year. This year, we've seen generally markets have been very good in Europe. So yeah, actually this time it was quite easy compared to last year. I think we started the fundraise having a term sheet, and about 2 weeks into the process, we were oversubscribed by, I don't know, 5x. So that was quite nice this year.
That's good to hear. You've already mentioned Corona, and maybe also we talk a little bit more about the post-Corona world. And like some hours ago, we had here Mr. Cookies from the German Ministry of Finance, and he also talked about how they helped startups during this very difficult time. So maybe we come back to this later. Let me come to you, Kiana. You were a former investment manager at Alston Capital. Now you founded MicroVC. How do you assess the VC landscape when it comes to early stage investments, and why did you found MicroVC?
So yeah, talking about early stage, we see, of course, also the rise of international foreign investors. Not only the big rounds in later stage, but also now Series A, and even in seed rounds, we see US investors mainly, not that much Asian investors. I've seen them more in the later stage. In the trend is in Germany that a lot of investors, even German funds, are starting with Series A, but notice the competition and are kind of under pressure to go more into the direction to seed or even pre-seed, to have a foot in the door, let's say. And that's also one of the reasons why I consider pre-seed and seed, because there, as a microfund, I can compete. Otherwise, in Series A and B, I'm competing with the big funds, and they have already big brands and deep pockets.
Cool. Thanks for your insights. You've already mentioned Asia and the US. Nazim, you CEO of Allianz X. Of course, you're investing globally, so you have a very good overview. Can you tell us a little bit more about the biggest differences between the European VC landscape and the Asian and US landscape, because there seemed to be kind of a difference?
Whether I do really have the picture. What's the difference? I think Kiana mentioned a couple of points. In particular, my impression is that European investors were more focused on early stage companies, that the late stage, growth stage was not that much on their radar. And that's also what I think, right? You can get good funding for early stage parts. When it comes to the later stage part, what is the difference? I do think, first of all, there's a deeper experience, and also with that experience, an understanding of business models and how they can scale and what kind of opportunities can come with them. So of course, there's a risk attached to it, but I do think understanding the risk and managing the risk that US investors in particular are more savvy on that part. So that's one of the differences, I would say. The second is, of course, it's not only the attitude topic, but it's also the availability of capital, right? So I think our capital is much more directed into, more safe havens than into growth opportunities. And if you have more capital available to raise your funds, to deploy that capital, then again into good opportunities that, again, right, bear risk, but with the risk comes the chance or the opportunity. Of course, that changes your attitude. So I would say those two topics are the ones that I would observe.
So you would say we Europeans are not risky enough?
I mean, if you want to nail it down like that, yeah, I would have said not that we're not risky enough. Let's put it this way, right? We don't understand to manage the risk on that side. I would more put it that way.
Okay. Paul, most of your investors are non-European. Does this play any role for VFox? Or do you have an explanation why there are they mostly come, I think, from Abu Dhabi, from US, and from Asia. Do you have any explanation for us?
Sure. So first of all, I would agree with what Nazim just said. So I think in the early stage, we have a very healthy VC landscape in Europe. And I think in funding rounds, in the small rounds, like below 5 million, around 85% of the capital is actually coming from European VCs. This really changes when you're moving into later stage. When you're looking at rounds above 50 million, it's just like about a third still coming from European investors and the rest from the rest of the world. It's also true for VFox. So when we're looking at our early stage investment rounds with Speed Invest, ID Invest, Seedcamp, all European based. So our starting was all in European. But then when we moved more to Series B, you just mentioned Mubadala came in, Omers from Canada, so more international, global VCs. But now for the Series C, actually, the majority of the money came from European investors. So around 60% of our Series C was European-based funds. What we see there is a trend that I observe generally in the world is that more non-traditional investors or non-traditional venture capital investors are moving into venture capital. So we see a lot of action coming from private equity funds, hedge funds, pension funds. And this is even more happening in the US, but in our case now with LGT and Partners Group, for example, we have secured traditionally more PE players for our fundraising. And this is, I guess, what you're pointing to towards this via like a lot more late stage funding rounds led by US or Asian investors. And I think it's not only that there's a lot more traditional and bigger US VCs, but now we are also, or like the European VCs also have to compete with the American hedge funds, with like the Tiger Globals who've been extremely active this year, or also the private equity funds. And this is what's leading to the statistics as we see them.
Maybe one more question regarding this topic, but is it a criterion for VFox where the money comes from? So do you prefer European VCs or do you not care?
No, I think we're quite agnostic there. I think we choose our investors based on where we see the best fit. So we don't mind international or European investors. We really don't. It's not a decision criteria for us. Really, not at all.
Okay, cool. Kiana, do you see like any explanation from your side? I know you have the micro perspective, but why do we have such a huge difference between micro and later stage fundings in Europe? That's not normal. So what's your point of view on this?
So I think there are two reasons. One is the historical performance that was pretty low in the past, and that changed. So we already see a development and an increase in venture capital in Europe and especially also in Germany. And the second one is that the main investors in the US are pension funds, and pension funds are not investing in Germany, like also not really insurances and state institutions. So typically they don't invest in PE. And that makes the difference, in my opinion.
Okay, so I think now we've described quite well the status quo, but we at Bitkom always love to have an outlook in the future. Nazim, I think you've already mentioned the bumpers we had. What do you think? How can we improve this situation here in Europe? So how can we foster more later stage venture capital coming from Europe? Do you see there, any hints, or can you help us somehow how we can improve that?
Fabian, you said at the beginning you're happy to hear that I'm optimistic and positive, and I will remain on that path. Let me start with what Kiana said. The history and the historical performances. So those are obviously changing. So people are realizing also in Europe that performance is developable, that we have companies like, VFox, Celonis, N26, Auto1 just, did their IPO this January. So we have those companies. So there's a good opportunity. And with those opportunities, I do think that the financing ecosystem will follow and develop itself. Paul was just saying 60% of their current round was coming from European investors. So with that part increasing and developing in a right mood and right way, I do think the financing ecosystem will follow. So that's a good thing about capital, right? Capital is mobile, so it's very mobile. So it goes, it flows to the direction where you have a good output. So the output is produced by the entrepreneurs. They're showing that's working. Thanks God, I have to say, and we should not underestimate that, right? We're always speaking about what can we do to have more late stage, growth stage investors, but that doesn't count anything if we don't have a very good solid base on the early stage side. So it's good that we have Kiana, looking at that area, because that's basically building the groundwork for the late stage, growth stage, and we're seeing that tandem developing. So looking into the future, again, I remain optimistic and say, yeah, it will catch up. Maybe it'll take time. And of course, we have to compete, right? Paul was mentioning Tiger Global or other hedge funds coming in, which is a good sign. So that means the ecosystem here is developing. So there is something happening. And competition is, in that sense, in my view, not a bad thing. It's the opposite, right? It shows this is a good continent where you can deploy capital and invest. So, and we're doing that now.
So, Paul, so you don't think that we need any support maybe by legislation or by the government? So do you think the market will go in the right direction, or are you skeptical?
Well, I see it as different points. I see historically, we've been now going into the right direction, and basically the interest from international investors is a proof point for that, for the growth that we've seen in Europe. But this doesn't mean at all that we don't need improvements in terms of legislation. I mean, we're still far behind. There's some initiatives that I think have been great and work well. It's like in Germany, we have the Zukunftsfund of 10 billion, and on the European level, we have the EIF. And there's initiatives in Germany that I've seen doing great things, like the Exist scholarship for founders, which basically provides basic income for the first month of starting a company. But I think we're still far behind with, for example, like the whole ESIP discussion that was going on in the past month. Shares for employees are still taxed as they were salary, while they're much more comparable to regular stocks. I mean, you can't sell them, you can't liquidate them until there's a cash event, and you still carry the risk of the company ultimately failing. So they should probably be taxed just like with the capital gains tax as regular shares are. And when you look then internationally, Europe is not very competitive. In the US, for example, founders or employees have the opportunity to pay taxes based on the fair market value of their shares at the time of granting and not at the time of vesting. So essentially paying for what they're worth when they get them, but not when they sell them. And so they have the upside basically tax-free, which is a huge benefit. And this ultimately drives innovation, because all those people who will make money from their shares will go back and start new companies or invest in young companies. And if you tax them heavily, there's less incentive for these people to go back or even have the money in the first place to invest. So I think we actually just missed a huge opportunity there, and I hope the next government will look into this again.
Indeed, like we as Bitkom also fought very hard to have a better reform of that ESOP topic, maybe the next government is a little bit more forward-looking, but we will see. I would like to talk a little bit more about the macroeconomic perspective. What I'd like to draw like a little bit bigger picture and analyze the consequences of maybe not so much European VCs in the later stage area. Nazim, do you think it is important that especially scale-ups are funded by European scale-ups are funded by European VCs, or do you think that doesn't play any role?
What do you mean with scale-up?
I was later stage startups.
Okay. Look, I think the past 15 months have shown certain topics, and what do I mean with that? There are critical topics that should remain here, and that we should be, still having under our control and making sure that we can supply that to the population. So that's one part. The other part is when we speak about the tech companies and when we say, do they have to be funded by European investors or VCs? I think, we should also take care or consider the other side, right? I think Paul said something very interesting. So they looked at the fit of the investor with their needs. And I think that's the important part, right? So we should not make a forced marriage by saying, well, you have reached a certain stage and you should only take the money from a European investor, even if it doesn't fit to you. I don't think that we will add any value with that, right? And I do believe that the market will manage and also match it in the right way. So we are discussing topics like, yes, we have a very good ecosystem in the early stage. So, and out of that early stage, companies grow up and that can scale. So yes, there are a lot of foreign investors looking into them, but also the Europeans are coming now, catching up with that. So I would not force it and say, it has to be a European investor. I mean, let's give an example. What would be the big difference if now the round of VFox would have been led by Allianz? I don't think that there would have been a big difference in the situation for VFox. So, it's what Paul said, right? The best investor should match with the company that fits best to them.
Yeah, definitely. Kiana, you've already mentioned that you can compete in the micro part also with other VCs quite well, like also from Asia or from the US. Do you think that for micro VCs, it's like that it's for early stage startups that this is important where the money comes from, or doesn't that play any role?
I would say, and I would agree to what Nazim said, that in later stage, it's not that important and it can be beneficial because then you open up your partnerships to international markets. While in pre-seed and seed, it's more important to prove your business model in the domestic market. That means for me as a micro VC investing in really early stage, pre-seed and seed, it's a bonus because the founders look for people in their markets because they need my network and my experiences. So still better to be in that space as a domestic VC fund.
Cool, thank you. Paul, sometimes like when reading German newspapers, there's always this discussion that we here in Europe, we are building these new tech champions, and then we are losing them to the US or to Asia. I would guess that you still feel yourself as a European company, is it? Because I think this discussion we sometimes read, they are a little bit strange, but what's your point of view on that?
Well, yes, I mean, we are a European company as we are now. We are operating in 4 European countries. We have no operations outside of Europe, so we're clearly a European company. Yes, we have some investors outside of Europe, but it's not even the majority. So I think in the case of VFox, we are clearly a European insurance player. And concerning the question you mentioned before, if it's important if or that late stage VCs coming out of Europe, I think what is nice about it, if it happens, is that the profits are more likely to return to the ecosystem. So when there's big exits happening, like for Auto 1, for example, that we've seen recently, then I guess when European VCs hold significant shares or make significant money on that, it's more likely that this money is going to be reinvested into the European ecosystem and not flow back to Asia or the US. But in general, as mentioned before, any company should pick their investor based on their operational needs or strategic interests and not based on pure location. And I think this is how most people also choose it.
Definitely, yes. One of the biggest buzzwords we have here at the moment in the political arena in Berlin is the term digital sovereignty. And do you think, Nazim, that Germany is afraid of losing like its digital sovereignty when like many critical infrastructure, like I would also say that payment is part of the critical infrastructure maybe. Do you think that Germany is losing its digital sovereignty?
difficult question to answer. So first of all, I'm trying to think about an example from the past, right? So if you look at the automobile industry, so have others lost their sovereignty because some of the OEMs have been so successful and did really rule the markets and roll the table on other countries. I don't know, right? So I don't think that the sovereignty was lost by that. Yes, I do agree. If you look at it from today's perspective, that certain areas might look like being captured by non-European tech companies, and I do think there are. I mean, the big ones definitely. So you were referring to payment, for instance. Yes, but the reason is again, right? I mean, they started far ahead of us. So it started in a let's see it this way. It started in a country where the population was more adaptive to taking that technology, using the technology. So it came to here. Now they have those topics. So basically the point I'm trying to make is it's not done yet, right? So I think it's still in process. It's still moving on, and we need to see going forward whether it will be lost or it will be divided up. And I think if you look at a market typically is always divided up. You seldom have a monopoly. Again, I'm putting that in brackets because I do think in certain areas we might go into a direction of a quasi-monopoly. But are those important topics? Yes, of course. And are those topics that we should not watch carefully and and try to build something, a competition or a competing offer? Of course, we should do that. In a nutshell, what I would say is, I don't think that regulation will solve those topics, right? I really don't believe that. I think it will come out of the market demand, and people seeing the opportunities, giving people the opportunities to do something. So, I'm again referring back to Paul, and he was absolutely right. If you look at ESOP programs, for instance, right? Give the people the incentive to do that. Give the people the opportunity to get into that market, disrupt that market, and of course, take the profit with that. I do think that will solve those topics.
Cool, definitely. Nazim, you've mentioned before the bumpers, and I think Paul also already mentioned the not easy times during Corona. I think it was especially in March and in April. Paul, do you think that the VCs were really responsible in these times and really supported most of the VCs, most of the startups? Or like, what's your point of view on that?
I think in the times what we saw, they were supportive, but they were not investing. So what that means is basically they turned their focus away from the market and more towards their portfolio companies. So everybody was working on the assets they had already invested in, and they were less keen on like making new investments because suddenly they all got so busy looking after their existing portfolios. Portfolio companies, and this is the same we've seen with us. So it has been very difficult to fundraise externally, but we've seen a lot of support from our existing investors. I think this is a general trend that was happening in the industry for a couple of months at least.
Definitely. And I've already would like to talk about these aid packages we had in Germany, and I think they were quite controversially discussed. Kiana, do you have an opinion on these aid packages? I think that were 2 billion tax money here from the German government. Was that really helpful, or was it at the end too complicated, especially for early stage startups?
So we will see that in the future, but what I noticed, and I was still with Alstein when Corona hit Germany, and maybe also adding to the question beforehand, we used Corona to make a good deal because everyone else was shock freezed, and we did a great deal which would have been probably too competitive. So, but coming to your question now, I think many VCs used it to finance their B or C deals in their portfolio. So there was kind of a wrong allocation of the budget that was planned to help future startups, but that was a side effect. And I think that also many other companies could use it and will build their business because of that support of the government. So you can't really answer this with it was used for or not. There were probably a bunch of startups which will not survive because of their business model or their weak teams, but there will be also startups that could bridge that time. And I know some examples who are in the tourism space. For example, I used to work for Holidoo. Holidoo is a very strong company, and they're growing, and they raised another round now post-Corona, let's say, and also other companies that are in that space, in the restaurant space. So for them, as having a very strong business model, it was a rescue plan, I would say.
Yeah. I often heard the opinion that usually in capitalism, the market rules such things. And then, like, there was, of course, there was not a very typical crisis. And then, like, all the startups said, we need help from the government. So do you think, Nazim, the market doesn't rule such things, such development? So do we really need the government in such situations?
Fabian, let me first add something to the first point that you raised, Corona and how investors behaved. As an investor, I'd like to also say a couple of words to that.
Of course.
First of all, I fully agree. I mean, what we also did is, of course, support our portfolio companies. So we did a lot of, follow-on rounds, supported them, not only with funding, but also really managing how to move forward and what to do. But we also did new investments. And we did that globally. So, we invested into Pi in the US, into Purpose in Canada. We invested into Relab in Hong Kong. So we continued also investing and deploying capital into the right companies that will be helping also Allianz. Now, having said that, coming to the point when people start saying, we have a crisis and we need the government. And if I understood you right, your question was more referring to, is that the right approach when people say, hey, the market will regulate everything? I think it's not fair to ask that question for the circumstances we had in the past months. And the reason being is, it was a truly extraordinary situation. It was a pandemic where businesses could not be run because government had to rightfully impose rules that prevented others to really do their business. And I think that's, in my view, then of course it's also the duty and the job of a government to say, okay, we're protecting the whole society, we need to do this, and for that reason we will be also protecting those who suffer under those conditions. So I think it was okay to ask for that, and it was okay to deliver that.
Okay. Yeah, I totally agree, but sometimes we heard these different voices, so I'm very happy for your clear words in this discussion. Unfortunately, we just have 3 minutes left for our panel, so I would like to start with the last question. And I'd like to start with you, Kiana. What would be your wish for 2030 for the European VC ecosystem?
So my wish would be a little bit of a shift of the culture, because we were now talking about capital, and I think like Nazim, capital will flow. So we will see that. But what is more important, especially for Germany, is to enforce people to get a more entrepreneurial mindset and to create a culture. And we have seen that back in 2008 or 2007, when Rocket Internet started with their first office in Berlin, what that could create. And there are a lot of critics about their business style, but in general, it attracted a lot of talents and it motivated many people who were in the first generation for example, at Zalando, to step out and found their own businesses. And that had a domino effect for a lot of other incubators, accelerators, funds, etc. And so I would like to enforce this. We have with Unternehmertum in Munich, the most successful entrepreneurship center in Europe, created 20 years ago. And those kind of examples should stay, and that they should enforce, and that will shift the mindset of young people and push them to create new businesses.
Yeah, indeed. I think we really have to work on this quite hard, and I think we also have to start with these topics also at schools. Like looking back at my school days, we never talked about founding a company. So I think that's truly a very important topic. We just have 90 seconds left. So looking at you, Paul, what's your vision for 2030 for WeFox?
For 2030? Oh,
yeah.
That's the time horizon we don't even plan. I think for 2030, the goal is the same as it is as for today, be the #1 insurtech in Europe and eventually globally.
Okay. And your vision for Allianz X, as at the moment probably one of the biggest European corporate VC. What's your vision, Nazim?
So I'm glad you haven't asked me for my vision for Allianz, but you just asked for Allianz X.
Yeah.
You know, my vision is continue doing what we do, continue attracting good talent, bringing that good talent also into Allianz. Of course, you know, not only be Europe's largest VC, corporate VC, but, you know, be more on a global scale, the largest. I think we have all the means to do that. So we just need to do it. And what we need for that is what Kiana was mentioning, a true entrepreneurial spirit, you know, a spirit of, you know, let's take it, let's grab it, let's, you know, move on and, you know, take those opportunities, they are there. And my vision for 2030 would be that we continue doing that. And also that Allianz as a 131-year-old company moves on being so dynamic and supports us.
Thank you very much, Nazim, for these, I would say, perfect closing remarks. Unfortunately, we have to come to an end. So I have to say thank you very much. It was very interesting, and I hope it was also very interesting for all our participants online.